Okay, now we're here for the return, a fruitful update, I expect. We have changed the name here from SRG to Falcon Energy Materials in line with the redomiciliation to the UAE in Abu Dhabi, I would suspect. It's very exciting to have you back, Mathieu. I think we met in Riyadh, of course, in person for the first time. That was great. So maybe you can, let's just start the basics again, just give a refresh. What's the cash sitting at right now? What's the market cap at approximately? You start there.
Yeah. So the treasury is still okay. We have a couple of $1 million still in the treasury, and the market cap hovers around 80. Why that's not a particularly uh, um, high market cap, it is also reflecting the kind of waves we had to kind of challenge last year. And actually, we done very little stock promotion last year. And this year, I think you'll see a lot more of us because we have a very exciting pipeline of news, and we think the market will like it and reward us with a higher share price.
Yeah, no, I mean, no doubt. I was actually going to sort of point that out, but before let's just do sort of a bit of a graphite market update, set the scene for those who are not familiar. Can you just where's the market at right now, generally?
So there's obviously some uncertainty around the kind of EV adoption rate, specifically what we see happening in the US. I think there's a lot of uncertainty. I think in Europe, it's easier to kind of look at the market and see where it's going. The rest of the world's equally easier to predict, specifically China. Now, specifically when it comes to the anode market, it remains firmly the case that the Chinese control in excess of 90% of the anode material production capacity. And that market remains in oversupply today. But with all the trade barriers going up and the logistics still being challenged in the world, specifically around the Middle East and the and the shipping companies kind of actually going around to the Cape to get to Europe. There is a very good business case to be made to expand production outside of China into areas like Morocco, where Falcon is operating.
Yeah, and that's what I sort of want you to just to reiterate next, because that's the thing. I mean, we're seeing most of your Western peers, right? They're not performing very well. I don't know if you know what the averages are for the index that you're tracking for your what would be classified for your peers, but you're certainly diverging significantly. At the same time, I would classify you as a covert, still fairly covert story. I mean, you're not
No,
very well known, I would say, about that.
we're pretty transparent in what we do, but
You do, but you are,
no,
but you're not marketing as you said. So you're not all over the place, to be honest.
no, we
And,
stick
and
to.
still, you're performing. It's a big divergence. So smart investors is picking up on it, I would suspect. But again,
Yes.
just highlight Chinese partner and Morocco. These are the two big differentiations. Just crystallize why that really makes you different from most of your
So,
peers.
the main thesis that underpins our investment case is that we are not interested in reinventing the wheel. And the Chinese collectively are 15 years ahead when it comes to uh, battery material sciences and development of the supply chain. And they're probably $1 trillion deep in investment in this particular subject. And so we have no ambition to reinvent the wheel. So we've chosen the route of a partnerships. We do that specifically with a group called Hensen, who are family-owned business out of China. They've been active in the anode material industry for over 30 years. And with them, we're building effectively a carbon copy of the plant that they are commissioning in China, in Morocco. And that's a big differentiator with some of our peers who have tried to take a much more organic approach and develop the flow sheets themselves. Whereas we are actually leveraging the existing knowledge and just redeploying it in Morocco.
Yeah, and I guess to pinpoint, I mean, our audience is familiar with Morocco and why it's a good place to do mining and industrial business in general. But maybe you can just pinpoint specifically why Morocco is the location to pick
Yeah.
for you guys.
First of all, it's in every kind of location in real estate business. It's it's about the postcode, and specifically the geographic location of Morocco is very important. It's kind of perfectly positioned on the top of the African continent, with almost direct access to the European market, just across the Gibraltar Strait, and you're in Spain. And Morocco, importantly, has free trade agreements with both the United States as well as with the EU, which is quite unique because the EU and the United States don't have a free trade agreement with each other. So you can really access both markets. But also important is that in Morocco, actually, and it's a little known fact, but they're producing over 1 million cars there today. And there is a lot of activity, and there's actual development in the battery supply chain to build Morocco into a hub. And so what you get is you get an existing car industry, 1 million cars between Stellantis and Renault Group, and you get a lot of investment from Chinese companies. And it's not kind of investments in PowerPoint. This is real capital that's been deployed to build cell manufacturing capacity and everything further down in the supply chain. And so you really get this cluster that's actually being developed in Morocco. So we actually foresee that there is just as much demand for our product domestically in Morocco as there might be on the international market. So with Morocco, you really get the best of everything.
Right. And Hensen. So you switched partners there, and I don't know if we need to go into detail on why that transpired the way it did, but here we are. We have Hensen now. So talk about Hensen.
Yeah.
What's the size of their business? How long have they been in business? What precisely do they do in the supply
Yeah.
chain?
So it's a very nice group. I was just with them yesterday, straight after Chinese New Year, and so we're deepening our partnership. But really, what the Hensen is all about is a family-owned business, which means that they control 100% of the business. There's no outside investors. And they have been in this business since the 1980s. And of course, in the 1980s, there was no anode materials business. So it was a very different kind of graphite business. But they've grown their business as the kind of use cases multiplied. So has Hensen adapted its business. And so today they are, I would say, one of the lowest cost anode material manufacturers in China. They're not the biggest, but the lowest cost. And that's interesting to us because as you move overseas, it's very hard to predict the price of graphite, but what you can manage is your cost structure. And as long as you're a low cost operator, you should be able to navigate the kind of volatility that exists in any commodity price or, chemical business. So with Hensen, we get the flexibility, so to speak, of a family-owned business, short decision making, and they speak very good English. They're a low-cost operator. They've been in this business a long time, and they have a keen interest in moving overseas and doing that together with Falcon.
And then just some context. What sort of revenue profile would we categorize this business into?
So,
I mean,
so
just a
they've
box.
Yeah, they've bought and sold various anode plants over the years. So actually, they sold all their businesses, and now they've just redeployed all the cash to restart a new business. So they are, in the business of, they had some synthetic graphite in the past, for instance, which they've all sold, and now they are just commissioning a new natural graphite anode plant. So today the revenue is very small, but as it comes to kind of maturity, you will see that they are actually going to be quite cash flow positive. And but I don't have the numbers for you today. What I can tell you is that the size of the facility that they're building is about 50,000 tons of anode material, and so you multiply that by the price that you receive in China, and you get to the kind of the revenue line.
Yeah, and what is the price received in China? For those who don't
So,
know.
so it depends what kind of quality you produce, right? So there's various grades, so to speak, but roughly speaking, I think that business will turn over probably about 100 million US once it's in steady state.
Yeah, and they started commissioning a few months
They
ago.
started
We're in the
commissioning
process.
late last year, and
Yeah.
there's various production lines. So they're still in the commissioning phase today, although some of the kind of earlier stages they are actually already producing spheroidized and purified graphite, but the coating line is still being commissioned as we speak.
And did they build that? Did they build that plant all cash?
Yes, all cash.
Okay, so I mean that gives people a pretty good sense of what
Which
you're
is
into.
also when it comes to the I wouldn't say accusations, but the finger pointing at times that all these businesses are built with cheap land and government subsidies. Actually, for our partners, that's absolutely not the case. They funded everything themselves.
Yeah, sometimes other people are just better than you are, and you have to
Yeah,
accept that.
yeah.
So I mean that's very good. So that's a good highlight. I guess we should just get into or actually, how is the partnership structured for people who haven't read your news release? Just clarify the actual structure of the partnership.
So at this stage, it's a technical partnership where we work together on the PEA that we published, on the feasibility study. We're mounting a pilot plant where Hensen will be deeply involved. But as we work through the various technical kind of steps that we need to take to make this business a reality, I think you can expect that hopefully Hensen will take a more prominent role, so to speak. Whilst I can't comment on the exact details, my visit to China was in parts to bottom out how we can deepen our partnership post feasibility study.
Well, I mean, you have alluded to there being a commercial partner on the corner, I guess.
Yeah,
So
which is not
Hansen's
going to be Hensen. It's going to be somebody
no,
else.
yeah, but
But
their actual interest at this point is only. But what is their financial interest now? They're a partner providing technical information, but do they have a? I mean, they're going to execute. They're not doing that for free, obviously, at this stage.
no, so we're paying, but on the other hand, they are a small shareholder or soon to be small shareholder in our company, and so there's this kind of symbiosis between the two, and of course, like you have to make sure that it's worth their while and our while, but we're quite good at crafting these kind of arrangements, and today I think it's something that works well for both sides, and down the road I think we'll deepen it, and you'll see more clarity on that probably in Q2.
Right. Yeah. I mean, I think we'll jump back to that topic a bit later, but that's good. Could you just sort of allude to the nature of the commercial partner? I presume that will be some
Yeah.
sort of preliminary offtake agreement, or
Mm,
wink, wink. They'll take your test pilot stuff and they'll test, and then it's gonna be. Is that correct?
Yeah, it's actually slightly more nuanced than just offtake. You have to appreciate that this industry is up and down, deeply connected and routed through China. So when we say we will produce active anode material, natural graphite active anode material, that means that ultimately is taken by somebody else who does something with that, who then produces something that is taken by somebody else who does something with it, and maybe
Sure.
ultimately after 5 steps it ends up being in a car on your driveway. But so the point I'm trying to make is that whilst we could make some headline kind of announcement around Falcon does an offtake with car company X. Actually, they're not the customer. The customer is somebody that you have never heard of, but is selling to car company X, or even their customers selling to car company X. So the
Sure.
point here is that if we agree that natural graphite and synthetic graphite are mixed to make ultimately the anode, you have to be quite strategic about how you position yourself in that kind of dialogue. And I think it's a universally accepted fact that synthetic and natural graphite are both going to be in the anode. So what that means is that you have to then agree on the ratio. And the ratio varies by geography, by customer. But loosely speaking, what it means is that natural graphite will constitute 20% of the anode, and synthetic graphite might constitute 80% of the anode. So, volume wise, what that means is if I produce 25,000 tons of natural graphite anode material, the corresponding amount on the synthetic side is 100,000 tons, 80, 20, 4 to 1. So, then you have to be quite careful about making sure that you get adopted, so to speak, into the supply chain, which means
Sure.
that all roads lead to a discussion with the people who make synthetic graphite. And that's kind of what we are working on and will be relatively unique. But what we're really trying to create is a one-stop shop for the customer where they can buy the natural graphite from Falcon, the synthetic graphite from somebody else, and then they have the mix that they desire together with the binder, etc., and the silicon and everything that goes in it to ultimately make the anode. So we're not trying to solve just one small piece of the puzzle. We're just trying to strategically align ourselves with somebody else so you can produce or propose the whole kind of um, suite of commodities that the customer ultimately wants, because they all work together. And so there's no point in trying to just say, oh, I'm going to sell in the open market my product, because no, it's get blended with somebody else. And if your quality is not compatible with that, like it's very dangerous. You'll be cut out of the supply chain before you even got started. So that's what this commercial partnership really kind of
So
centers around.
right. So I guess you've alluded to many things there. So if I continue to allude to some things, is this partnership likely to be location dependent? You're producing in Morocco. Could it be fair to assume that likely your counterparty will also be building something to produce in a similar timeline?
Yeah, so it's a good point. So in the end, yes, because the same desire is there on the synthetic graphite to expand the production capacity outside of China. But it doesn't need to happen today. It just needs to have you need to be able to show the pathway to doing that.
Yes,
And so the guys we're speaking to today have not announced where they're going to build their international synthetic, actually, graphite production facility, but we have a good idea where, and it kind of fits into kind of our strategy. And it's not Morocco, for the record.
might be decently close by, a
Yeah,
bit closer to
somewhere else.
China.
Yeah,
Yeah.
yeah, yeah.
So and fair to say that the pilot plan sort of feeds into this. You'll be working with them to send to do testing, and that's step one, and then it will sort of converge, hopefully.
Exactly. And so what you really want to get to is that you're kind of each other's preferred, kind of call it blending partner. And that way you're kind of joined at the hip. But because, we're new to this game, like you have to be humble. Like, these guys have existing customer relations. That is part of what we were trying to do with C1 as well, is leverage those kind of relations. And those are not all Chinese, they're South Korean, they're Japanese, and they're international customers. And that's very important to us, because you come with the credibility of a large synthetic producer, and then there's us, and then we try to do it at the right cost, and that's how you can break into this market.
And then, I mean, might also be preliminary, but would it be fair to say that it wouldn't simply be a case where you would sell your end product? You would also have a margin uptick on the blended product, combined blended product, let's say.
Um, yes, but it's very hard to kind of, yeah, you might maybe get a little advantage for doing it in Morocco over China, but I like our business case is that does not, and like the base case is that does not happen, and then it will be a bonus if it does, so to
But
speak.
also, so my question is actually, I mean, you're producing the end product for the natural graphite, and your
Yes,
counterparty will be doing the synthetic graphite,
correct.
and you'll be blending it, and then it will be sold
That
to a. So
that,
would you
that
take
depends,
a
because
profit
not
uptake
all
from the combined
customers
product?
not all customers ask you to do the blending. So some will ask you to do the blending, and some will want to do it themselves. So they just want to make sure that they procure all the ingredients, and then it happens at the customer site.
Yeah.
So the answer is that it's not 100% certain you'll get a premium, but
Mm,
more important is that you have your um, place in the supply chain firmly secured, because
sure.
you don't want to wake up one day where somebody who produces a lot of synthetic graphite says, Gorm, this is great, you were our partner, but now I've got my other friend who's also trying to get into this business, and I'm swapping him out. So what we
Right.
have to do is make sure that we share in what we do together with the synthetic, so we secure our place. And so the only way you can make that happen is by having economic alignment. So, well, yeah, of course, we will both try to sell for the highest price. I'm actually prepared to pay the small, call it marketing fee, in order to secure my place.
Yeah, I mean, and it should be pointed out, obviously, if you look at the PEA, it's not like it's needed that you need a bit of a
No,
premium.
exactly.
You're already printing cash if everything turns to plan. But just briefly before we get into the PEA, I guess we should speak briefly about Tanger Med Engineering and Ansaplan, who's been responsible for the technical study. Just who are they? Why are they high quality, etc.?
Yeah. So always when you do studies and you're listed on the Toronto Stock Exchange and also on the ASX and in London, when you publish a technical report, it needs to be done to a certain standard, which means that it's got to be signed off by what we call qualified persons. And the QP, the qualified person, is not something that you can just wake up and decide I'm the qualified person today and I'm going to sign off. So you need a large independent engineering firm to effectively verify independently the work that you've done. And that's the role that Ansaplan fulfills. So they're very good on the chemical engineering side. They've done this for other commodities and peers of us. And so they are overseeing, so to say, the kind of technical report and allow us to publish a 43101 compliant technical report, which is something you can find on our website. And so we'll continue to work with them because we want to be transparent in what we do, and we have every intention of publishing the feasibility study that we're working on with Ansaplan on our website as well. And when it comes to Tanger Med Engineering, of course, when you develop a chemical plant like this in Morocco, you need to adhere to local Moroccan building standards and regulations. So, from that perspective, you need another outside advisor that can help you navigate kind of what are the criteria, so to speak, that you must meet in order to develop this in Morocco. So, yeah, you need to have a local engineering firm, an international engineering firm to put the kind of independent wrapper around it, and then the Chinese contribution, which is the kind of know-how, so to speak.
Yes. Okay, so let's speak about the PEA. I'll let you just freeball first, highlights, talk about the phasing, economics, just, and then I'll ask follow-ups.
So the PEA is something that we published in November of last year, and it's based the engineering and design on the plant of our partners, Hensen in China, in Weihai. And it's a 25,000 ton output facility, means it consumes about 50,000 tons of fine graphite material. The capex for a facility like this is split in two, but the all in capex is $106 million. The pre production capital is about 73 million US. And the construction period we've established is about 18 months. It could be a lot faster. In China, they tend to build a little bit faster, but we have been a bit more conservative and put 18 months construction time. Now, once you've sunk your $106 million in 18 months of time, you get a facility that produces, outlined 25,000 tons of anode material, and the cash costs are very important. This is a flow sheet that's based on traditional, call it, anode refining, so spheritization, purification, and coating, and so it uses hydrofluoric acid. And whilst that is a very strong acid, it also results in probably the lowest operating cost you can aspire to have. And so our operating costs are somewhere between 3,000 and 3,300 US dollars per ton. And this is a very important point because if you are able to operate at those kind of levels, you'll be able to make money. If you have operating costs that go to the words of $4,000, $5,000, $6,000, it'd be hard through the cycle to make money. And so we're very laser focused on these operating costs because it's the only thing we can control. We don't know what the price is going to be, but we do know what our cost position is going to be. And so NPV and IRR speak for themselves. Of course, like there's a big numbers, and it's very much driven by, your ability to have low cost, low capex, but also, of course, what is the landed price of anode material in Europe in the future?
Yeah, and again, some people know these numbers by heart, but let's just speak about it. So these are the cash costs you're seeing in the study. What is Hansen expected to see in their facility, for example, per ton?
They're hoping a lower cash cost, but that's driven purely by the Chinese context. So internationally, we have been advised by not only Hensen but many others in China that if you can strive to get your cost to kind of close to as 3,000 as possible, you have an economically viable business. Now, it's very hard to look at the cash cost curve because there's no such thing that exists internationally yet because there is no anode materials
Correct.
facilities internationally yet. So, but this is what everyone feels you should be able to operate at, and you'll be able to make really good money through the cycle, so to speak. And I would argue that this is probably 25, 30% higher than what the cash costs are in China. But but it's equally realistic in the Moroccan context.
Yeah, I mean, obviously the Chinese don't mind participating in those economics, so that speaks for itself.
Yeah.
But let's again, what is the NAV and what is the IRR? What are the figures and what price assumption is used? Just
Yeah.
say those numbers.
So the NPV is about 1.1 billion for the anode plant, and the IRR is hovers around 80%. And the price assumption that we used is a long-term price of 9,000, which is consistent with the long-term price that all our peers are using. Now, I can argue that the current spot price is much lower than 9,000. It's not, it's not like 3 times lower, but it's lower. So it hovers
What is
probably
it?
around
That
the high 5,000s, 5,800. But that's why you can see that the margins that you make, even at current spot prices, are very attractive. And long term, everyone is always, it's always the same story. Like, the price tomorrow is going to be better than the price today, but you have to make sure that you make money at today's price too. And that's why we're so focused on cost. And
yep,
so, even at the current spot price landed in Europe, this will be a very interesting business.
100%. I mean, it's a very high quality business even at these margins. So if you're getting to 9K, I mean, it's like soft, not quite, but close to like those sort of margins you would see in a software business, something like that. So
Correct.
it's
Yeah.
yeah, it's exceptional. And then I guess we should just get into the phasing. So you've outlined the phasing here, and actually the majority of the capex is from the mine in this phasing, but the majority of the NAV is certainly from the anode plant itself. So the question becomes then, I don't know if you can directly answer this or not, but does it make sense to build the mine? Could you not just buy the input? Would that not be easier?
You can. But there is huge strategic value in owning the resource that underpins your business case. The question is, of course, on the sequencing. And
Yes,
as you rightly point out, you have to invest quite heavily into the mine for, a reasonable return, but the same amount of money or half of that money generates a much bigger return on the anode plant. Now, having said all that, it's very important that we still focus on our project in Guinea. We're not abandoning that at all. But the enabler for the project in Guinea is the plant in Morocco. Because on a standalone business for the mine, yeah, it probably doesn't look so good. On the other hand, we do need to concentrate.
you
so
do.
so all our attention is focused on Morocco today to make sure that we develop this anode plant. But at the same time, the main beneficiary of that might actually be the mine in Guinea, because without that anode plant, it's very hard to see how it would work on a standalone basis. And then it comes back to, like, is this the only mine that's going to feed the plant? And the answer is no, of course not, because in the end, when you build a large kind of refinery, and any commodity, you typically would look to have several sources feeding that mine, just for variations in quality and operational considerations. You would never just have a single source feeding a single refinery. So we will always be looking to buy additional concentrates from our competitors or otherwise, and they would be looking to buy from our mine just to diversify the risk when it comes to operations and quality.
Yeah, I mean, and I think people who listen to you know that you're a rational gentleman, right? So you're going to sequence this in the way that maximizes shareholder value, while
Correct.
still, respecting or sort of following up on what you promised that you will do in both host nations. So I think,
So what's very important to us today is making genuine progress in Morocco. So what we need for that is we need to develop a pilot plant, which is going to basically prove, in theory, not at lab scale, but at kind of semi-industrial scale, so to speak, that we can make anode material in Morocco, and that would be the first one to do that. But that's very important. Of course, in parallel, we're working on the feasibility study, which is, a document that we need in order to, first of all, move the permitting forward in Morocco, but also we need that document to raise money for the project's construction. And then, that's what's on roll really for the first kind of half of this year in Morocco. And once that's delivered, of course, we will immediately go into site preparation, ordering of long lead items, and then ultimately construction by the end of this year, early next year in Morocco. Now, when it comes to Guinea, we have done quite a lot of work on the detailed engineering, and we've studied various options, phase this project in correctly and match whatever happens in Guinea with what we're doing in Morocco. So we are in constant discussions in Guinea around that. But as I said, the enabler for the project in Guinea is the plant in Morocco. So we have to make sure that that gets off the ground as soon as possible, because only then will we have a home, so to speak, for our concentrate from Guinea.
Okay, so I mean, in the IDP, the Integrated Development Plan, you're just remind everyone what scenario in terms of timeline are you describing there? There, it's graphite, the mine first, then it's the and how is it sequenced? Is it somewhat parallel overlap, or is it basically
Now,
when it's
in reality, we will probably aim to have the anode plant ready before the mine is ready.
but in the IDP that's not the case. It's fully sequenced there.
That's correct. Because you under 43-101 rules, you have to feed the refinery 100% with feedstock from your own mine. But
Yeah.
but as I just pointed out, operationally, you would never do that.
Exactly, but I mean the point that I'm trying to highlight is that you would see an enhancement in economics once
Yes,
you
I believe it's
correct
going
these
to be
things.
better, but we have to abide by the rules that are set
Yeah,
within these 43-101 guidelines, which mean that you are not allowed to use other people's concentrate in your refinery, which is not what happens in real life. Those are just the rules, and so that's why we have to present it this way. But as you point out, I think the actual result will be better than what we currently have in the IDP.
yeah, and that's I mean not everyone is aware of that, so that's why we're highlighting it. But
Yeah,
again, to be very specific and very to clarify exactly, in the IDP, it's the case where you build the mine, fully ramp it up, and then you build the anode plant. So you would
correct.
so it's I mean the anode plant is effectively delayed by almost 2 years or something like this, or even more.
Yeah, it's probably slightly less than 2 years, but that's right. But it's definitely delayed versus what we hoping to do in real life. Um,
Okay, so let's just again reiterate all of the items to get to construction decision for the anode plant. So you just sequence everything out and what you hope
so
to be able
so
to
we
ship.
need to do the pilot plant, and we need to have a successful campaign with the pilot plant in order to make sure that we have customers identified ahead of making a construction decision, because you cannot start spending money without having secured a customer base. So that pilot plan is very important, and the successful kind of operation of that pilot plan is very important in
So
the first half of this
let's
year.
stop there. Pilot plant. Inputs to pilot. What are the inputs to pilot plant? When do you hope to initiate? How long does it take to build it? How long does
Yeah.
it take to actually test it,
Very
fix
detailed
stuff?
plans ready. Hopefully, we'll update the market in kind of March time on this. The pilot plant is not a huge building by itself. It's about 600 square meters. It will have the capacity to produce about 100 kilos a day. So you annualize that, it can do probably about 3,000 kilotons. So it's not small, but you're not going to run it on a continuous basis. Cost will be somewhere around $1.5 to $2 million for this little plant, and it will do the three steps of what the big plant is going to do. So the spherodizing, purifying, and coating of the material. And what will it consume? Of course, it will consume graphite concentrate, which we'll procure from. We have samples from our own mine and from other mines, and of course, we'll use some of the assets that we're using in the full scale kind of factory as well. So hydrofluoric acid, hydrochloric acid, and nitric acid, a little bit of limestone, stuff like that to neutralize the waste. That's what it will consume. And we believe that we can get this thing up and running in less than 6 months, but probably more like 3 months from where we are today.
From where we are today or from March? So probably like
Yeah, well, give or take for
start of
from
Q3.
there.
Say you're up and running.
Yeah.
And then to to do the rigorous testing with probably the commercial partner or whatever.
Yeah, that's kind of a feedback loop, right? So it's not like you do the test and then it's either yes or no. You do the test, you get the results back, you change something, you send the batch again. But because these volumes are not enormous, and there's airplanes going back and forth both to Europe as well as to China, you can get these feedback loops going, and then it will take time, right? Like it's not like you get everything kind of sorted within 3 months,
No.
but you'll get a really good indication of where you stand within a couple of months, and if you're actually able to deliver what the client wants. And then once you have a higher conviction on who your customers are going to be, then you can move into the next phase when it comes to development. And hopefully, in parallel, the feasibility study will be ready, and then we can move into kind of the fundraising efforts to fund the development capex of the anode plant.
Okay, so short-term commercial partner announcement, hopefully, and then pilot plant description and announcement of initiation of that. Likely, I would presume, and you don't need to nod or do anything, but you'll probably have some sort of financing with, strategic partner. I would bet it's going to be Hensen, but who knows, right? That's just my words.
I can, on the commercial side, it's probably not going to be Hensen.
I mean, putting in some equity and increasing their shareholding in the company wouldn't. I would presume it would be interesting
Yeah,
to them.
let's see. Let's see.
We'll see. But anyways, these things might happen, right?
Yeah.
So then you get into Q3. The plant is up and running. The feedback loop is started. Parallel to that, I would presume permitting in Morocco is. Does that start after the FS, or does it start now?
No, you can start earlier, but what you need, and this is something that we will also give more clarity on the moment the pilot plant is announced. You know exactly where we're going to build it, because the
Yeah.
permitting you cannot do that like on an imaginary plot.
No.
So you need to say this is where we're going to do it. So, but it's going to come clear very soon here. I'm February is almost over. It's the shortest month of the year, so I'm not going to say February, but kind of March time, you should really know, what the location is, and ties obviously into the announcement around the pilot plant. So I can't tell you
Yeah, it's
that
the same
we do
announcement.
one and not the other. Like it's all
Yeah.
linked.
So then the permitting is initiated fairly. I mean, pretty much right after that.
Yes, we will start the dialogue. In the end, it's going to be in close proximity to some other industries. So it's in a way it's a little bit more. It's not like completely greenfield permitting, so to speak.
Okay, but you okay? So just high level. We don't need to get into permitting details. But when do you expect that to be completed? Do you expect it to be sort of
No,
a critical
well,
item?
obviously it has to be done by the end of the year if you want to start construction thereafter, right? So, but I think we'll be able to meet those deadlines, and but it all depends kind of how well you have your house in order when you submit all the documents, right? And of course that's something that we're really working on and building out the team in Morocco, etc.
So do you think that the permit in hand is a requirement to secure the financing package? It's not like the
Most
raising as well.
likely, because you know, let, if there's any form of debt financing, the answer is most certainly yes. If we 100% equity finance this, and people are willing to take different risks, equity financiers take more risk than debt financiers.
Yeah.
They might say, "Well, we think you're going to get it. We're happy to try to kind of shorten the development timeline and take more risk." But the moment you introduce debt financing, the debt guys will most certainly want you to have all the offtake sorted and all the permitting done. Otherwise, their money is not coming.
Right. But I mean, you expect you expect. I I think that gives a pretty good outline of two construction decision.
Yeah.
Um,
So 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 really, kind of 2025, the first half is very much focused on kind of rounding out the consortium, so to speak. There's still one party to identify and work on the commercial side of the business, and the second half of the year is very much focused on kind of the getting construction ready. So developing the site and doing the early works there, as well as getting the kind of permits that you need to start full construction as well as operations.
I should ask: do you expect any revisions in the FS material revisions? compared
No,
to
I
the.
hope it's going to be better than what we have in the PEA, but it's based on the existing design and cost that we know Hensen has achieved for their plant, and the all-in cost for the same plant in China is about 47 million US dollars. So when we're saying ours is going to cost 100, it's already 2 times. Now, I might be wrong on the shipping. I might be wrong on kind of what it costs locally to build the plant in Morocco, but I don't think we're going to be out by tens and hundreds of millions of dollars. I think if we're conservative, which we have been in the PEA, there might be room for a little surprise. Otherwise, it's going to be exactly the same, but I don't think it's going to be materially higher than what we have published.
Okay, I mean, yeah, but to clarify, the FS again is going to be the IDP but updated, so it will still have the sort of the same sequencing
Correct.
presumptions. But obviously, you'll differ from what you do in reality. But
Yeah,
nevertheless,
that's
okay.
correct.
And then just remind everyone, construction starts then hopefully, say very early in 26, rather. You'll start. How long do you expect it to take? You said, I think you said 18
Um,
months, but it might be less.
like we've budgeted 18 months. In reality, the Chinese have done it well under 12. So if it's going to be 12 and then there's 3 months of commissioning attached to it, maybe that's a realistic kind of answer. So if it takes most of 2026 to build it, first half of 2027 you are in commissioning mode, you're already producing, but you're kind of ramping up, then I think that's a realistic timeline.
And then the financing package. I mean, what do you have in mind?
So it's going to be a mix, in my personal opinion, between strategic investors, equity financings, and a prepayment from a customer. I don't think that debt financing from a traditional kind of bank is something that we will actively pursue. It may kind of happen, but my experience with that is that these things take a long time, and typically banks are kind of risk averse, so to speak. So they're trying to kind of make sure that you have, um, you know, as few risks as possible, specifically when it comes to the offtake, which is not something that we really feel we need to do right now because the quantum that we're looking to finance is $100 million. If this was a $5 billion plant, it would be unavoidable. We have to go to the bank. But here we have a cornerstone investor with La Mancha, and we're hoping to attract one or two others, and then round that out with money that we raise in the market, plus a small prepayment on some of the production. And I think we'd be able to finance it that way and don't have to go to the bank, because the bank is going to give you, Gorm, like very simply put, they're going to say, what's your commercial arrangements? Do you have a fixed price contract? Do you have some
Yeah, yeah,
kind
of
of
course.
a high and a low? And actually, we'd like to sell. We'd like to not give up the upside, right? So if you have a floor pricing, it also means you have a ceiling. It's always the same in these contracts, and so we don't want to do that, and we don't feel we have to. So we're trying to kind of make the returns uncapped. And otherwise, if you go to the bank, you probably get capped returns for the foreseeable future.
I mean, the payback, correct me if I'm wrong, is literally like 8 months or something like this.
Yeah. It's a year based on the current plans, but it might improve a bit. So what it like we really feel that $100 million is financeable. It's not insignificant, and we have to work hard to get our share price up, etc. But we feel that that's that kind of money we can raise through our existing partners and new partners.
Yeah. So I know I'm being a bit of a, I mean, it's sort of a pestering question, but in an ideal scenario, what quantum is raised through equity in your mind?
No, too hard to
Strategic
say
or
today.
not, you know?
I'll give you the example of, just so you get a feel for what's going on. Like Ford has done a prepayment on a synthetic graphite plant in Morocco owned by BTR, and it was $150 million. So, people are writing those kind of checks for anode material in Morocco, um, either wholly owned by the Chinese or partially owned by the Chinese, or like us, not Chinese. But so we'll do whatever is the least dilutive, most value accretive financing. On the other hand, people want to invest in the company. We have got to offer them, equity because that's good for everyone. So, but we'll finally balance this. I'm not overly concerned about it.
And then between now and then, to essentially to get have the financing for the build secured, how much spend do you envision just to get there? So essentially, this,
We probably need to spend another 10 million bucks or something like that.
and we're talking U.S. buckaroos here.
Yeah, 10 US, which we'll raise in small increments opportunistically. There's no shortage of people who are offering us money.
I bet.
It's just how much money and when, right? Like, we just come out of a difficult year where we did very little marketing, and the result is that the share price is exactly where you expect it to be. It's the same share price as the start of the year before. So at this price, I don't really want to issue too much stock. I would encourage people to buy in the open market, but to the extent we will offer stock, it would be very small homeopathic doses at this share price.
Okay, Matthew. I mean, honestly, I don't know what else to ask you. I think you
Oh,
give
it's
a
been a
pretty good
pleasure.
account of this. I think for some people who hear this, I mean, it sounds almost too good to be true because if you look at
Mm.
it's just going to produce such fantastic returns for shareholders. It's almost unbelievable.
So the answer there is, if even only half of it, what I just said, is true, it's still good.
It's still
So,
good. I mean, that's the point here.
we think this is an attractive speculation. Of course, everything's flawed with risk, but you get a team that has a proven track record in raising money. The idea we have is not the worst idea we've ever had. We've actually been kind of proven intellectually right over the last 3 years, given the state of the industry outside of China. What we exactly warned would happen has actually happened. And for now, for us, the main objective is not to only be intellectually right, but also be commercially right and make money out of this idea. And that's what
Yeah,
2025 is about.
but I mean, to some extent, it's not just you're intellectually right. I mean, the market is actually, although you are sort of not going hard yet on marketing, but those who are in the know, they're saying that your business plan is actually feasible,
No,
while
correct,
the
correct. So
others
like
are not.
but like we have not made a penny out of it yet.
No, you have not.
And
But
so the objective is now to kind of prove everyone that we can get this up to, a couple of $100 million valuation, which really would reflect the true potential of the business. And that's a job at hand for 2025. So we're full steam ahead. But
yeah,
in a way, we're more excited now about what we're doing than ever before, because all the stars are aligning, and I think this is going to be our moment.
but I mean, the point being, you haven't made a penny, but your bloody market cap is at 60 million US, or well, it's 55. So,
Yeah, it was
which is
better
like
than most, but
yeah, but I mean, point being, I mean, if this plays out, people can do some simple napkin math there. I mean, you'll cash flow that this Anode plant
yeah,
first half of
just
27 or whatever,
look at a very
easily.
simple EBITDA, right? Like you make so much money doing this, but this is true for these kind of chemical businesses. Sometimes you make a lot of money in a corner of the market which is just overlooked, and this is going to be one of them.
Yeah, and then maybe Matthew, this is maybe a bit redundant, but you foresee yourself expanding then hopefully in Morocco over
Yes, of
time,
course.
and
Yeah, we're not going to just stick around just doing this. We're going to double it. We're going to do it in other locations. Once you've proven the concept, like why stop? Like the hardest thing is get the first one off the ground. The second one, look at Tesla. Yeah, it's still a commissioning nightmare, but he did it. But the first one, is the hardest one, and this will be exactly that.
okay, let's leave on that note, Matthew. Thank you very much for your
Thank you,
time.
Gordon. We'll
Looking
speak
forward to
soon.
checking in you actually executing on this in the coming quarters here.
Yes, that's great.